Joining me right now is former Council of Economics Advisors Chairman and Hoover Institute Distinguished Visiting Fellow Kevin Hassett. Kevin, great to see you. Thanks very much for being here. We spoke with Jerry Storch, the former CEO of Toys R Us this week, who said this holiday shopping season is unimpressive. We do have retail sales rising unexpectedly in November, month-over-month increase of 0.3%, year-over-year increase of 4.1%. How would you assess the retail environment right now and Madison's reporting?
Right. Well, I think that it's looking like a weak holiday if you look at the composition of what people are buying. You nailed it on the head when you looked at luxury goods. But the thing to watch out for is just that the whole seasonal pattern of purchases around Christmas has really changed because of online sales. And so you could pretty much, go to Amazon and get it tomorrow. And so you're not necessarily in a rush to get everything way before Christmas. And so I think that we're going to get, or Hanukkah, I think we're going to get a big bunch of data like right around Christmas time that's going to show us whether it's a good Christmas or not. My expectation is that the Atlanta Fed's GDP now is saying that the fourth quarter is about a 1%, and my expectation is that it could easily be bad enough that we're looking at a negative quarter of the fourth quarter.
So, I mean, part of the debate is how long it takes for an interest rate string to take impact, right? I mean, the Fed has raised rates 11 times. I know they've taken a pause these last couple of meetings, but there's a big group of economists out there who think it's going to take a total of 18 months, that the next 6 months could actually prove to be rocky from a macro standpoint. How do you see it in 24?
Yeah, that's exactly the way I see it, Maria. And you and I have talked about this on your show before, that we're at that stage where first price inflation goes up and everybody's real wage goes down because wages don't move. And now wages are kind of catching up to prices. But then what happens is that price inflation and wage inflation are kind of stuck together, and they stay there until unemployment goes up and wage inflation goes down, and then price inflation can go down too. If you look at a chart that I put in National Review, in a column in National Review this week, you can see that basically we got 4 months in a row where year-over-year price and wage inflation, we're just about exactly, I'm talking about core, 4%. And so you got, 4 months in a row where core inflation year over year is about 4%. That's not a deceleration in inflation. And so I think that all the dovish language coming out of central banks this week is really irresponsible. They don't exactly know that they have inflation under control, and they need to be risk averse about it. And I think that it almost feels partisan to me, that they want to juice the economy up next year in an election year, because you need to be risk averse, right? Like look at the core inflation numbers, and they're not saying we're headed to 2, and yet the Fed is acting as if we're already there and we've already won. It reminds me of like George Bush, declaring victory, right, prematurely in the Iraq War. It's just like you shouldn't declare victory until you really see victory in the data, and it's not there right now.
Well, everybody keeps mentioning the fact that it's an election year. My last guest said the same thing, that the White House was going to pressure Jay Powell to get those rate cuts going. Earlier in the week, we talked with John Catsimatidis. He said, I am sure that, and I'm telling you for sure, oil prices will be down next year because it's an election year. The White House is going to do anything they can to push gasoline down going into an election. So, I mean, everyone I've spoken with is expecting a manipulation here in 2024 to make things look as rosy as possible going into the election for this White House. And the inflation is still there. Fox Business's White House correspondent Edward Lawrence grilled the administration yesterday about high consumer prices. Watch this.
So you mentioned the price of eggs, milk, and gas are down over the past year, but what do you say to Americans who are looking at the month that President Biden came into office? Eggs are up 24%, milk is up 17%, all types of gas is up 37%, and the prices overall are up 17%.
The president actually spoke to this not too long ago, I believe on Tuesday, actually, just a couple of days ago, and he says we know there's more work to be done, right? And that things are still unaffordable. The president's going to continue to fight for the American people, continue to make sure they have a little bit of breathing room. Is there more work to be done? Absolutely, but we have seen some prices go down.
So will they be able to manipulate that as well, Kevin, by the election?
No, you know what the government has to do, right, is cut this runaway government spending, which is feeding inflation in the first place. And if you think that Joe Biden and the Democrats are going to be more responsible next year because it's an election year, you're just wrong. And in fact, what they might try to do is spend even more to juice the economy up running into the election, which will give us even more inflation. And so I think if you think through the dynamics, the only reason to be hopeful about inflation is if you look internationally, Japanese GDP dropped almost 3% last quarter. European GDP is declining. The rest of the world is looking like they're already in recession. When that happens, oil prices go down, and that helps us with our energy prices, at least here in the U.S. And so there's some cause for hope, but there's a lot of reason to expect we're not there yet, too. And so I guess that if anything, inflation is going to surprise on the upside. It sounds like that's where you are, and the Fed's going to have to keep rates where they are well into the summer, at the very least.
I think that's right. And I'm glad you mentioned Japan. We've got the Bank of Japan Central Bank meeting next week. So we got the BOJ next week. We already heard from the European Central Bank and the Bank of England this week. They both held interest rates steady, of course, along with the Federal Reserve, which also took a pause this week. You have a new piece in the National Review where you write this: perhaps inflation will hit its target and the dreams of a soft landing in the United States will be fulfilled. If that happens, it will be because there is a hard landing everywhere else, Kevin. Tell me about this, because if Europe has a hard landing, because obviously there's a reason the ECB held steady and that everybody thinks that the ECB is going to cut rates before the Fed cuts rates in 2024. If we have a deterioration further in the European economy, doesn't that impact the U.S.? Aren't we coupled?
Right. Well, we are, but one of the things that will happen, is certainly at the beginning, is that the global demand for everything that is a tradable good will go down a lot because these economies are on the ropes, and that'll help the U.S. Fed get control of inflation, even if growth stays reasonably okay here in the U.S. So there is if you really believe the soft landing story and you want to have like a rationale for it, then the rationale has to be that we can continue to have pretty good growth and get inflation down, because it's not just like a closed economy Phillips curve. It's the decline in GDP everywhere else in the world that's pushing prices down, and we just sort of lucked into having it happen exogenously to us. And so that's what the soft landing story has to be, and it's possible. It's possible, but again, if I'm at the Fed, I'm being really, really wary of inflation not going down. I show the core inflation for the last 3 or 4 months and say, hey guys, there's no sign that we're headed towards 2, so we're going to continue to watch and wait, instead of saying what they're saying, which is basically signaling lots of rate cuts next year. And I think that's irresponsible and perhaps partisan. Perhaps. All
right. Well, that's what we want to know, if it's partisan politics in an election year. Kevin, it's great to catch up. Thanks very much.